Hey guys, James here with Waterford Business Solutions, and I wanted to continue on our subject this week talking about retirement accounts and the different types of retirement accounts that employers can offer to their employees, small businesses or regular businesses, and small business owners can take advantage of. This week I wanted to dive into the most common one that you are probably used to hearing, which is the 401k. 401ks have been around since the 1980s and is probably the most prolific type of account that exists right now. It's estimated that at least 4 in 10 employers offer at least a or 6% match of revenue for their employees, and 6 in 10 employers actually offer a 401k. So it's a fairly prolific account that many employees have access to. Now, 401ks differ in a lot of ways from a simple IRA, like we talked about last week, in the fact that they are a lot more complicated to set up and have a lot more regulations on them. Just like simple IRAs, you've got different requirements that you as the employer can put on employees to qualify. Now, unlike simple, you've got a lot more control over what these are. There are still federal minimums that you have to comply with, but there's a lot more control on hours worked, time involved in the company, things like that, even age requirements that you can put in, which do not exist with the simple IRA. So it's a lot easier to eliminate part-time workers than what you can with a simple IRA from participating in your 401k, because it's not just a monetary amount that we're looking at here. There's time, there's hours worked, things like that, where part-time or seasonal workers may be excluded from your 401k depending on how you have it set up. 401ks also don't have a minimum. It's not just a situation where you say, hey, I'm going to do a 2% match or a 3% match. Now, I will say it is most common to see a 3% match on any 401k. And in fact, as I said earlier, 4 in 10 or 40% of employers will have up to a 6% match. But you also have flexibility in saying not just, oh, I'm going to do a 3% whole match or a 6% whole match. You could say, I'll do a 3% whole match and a 0.5% match for an additional 2, 3, 4%, so that you kind of ease out of what you're putting in based off of what the employees are putting in there too. So there's a lot more flexibility that you have there, which is definitely really good. On the counter side, 401ks are highly regulated. There's a huge legal document that you have to make sure is set up correctly. There's also a bunch of reporting that you have to do at the end of each year. So most employers will actually end up hiring a TPA or a third-party administrator to manage their 401k. So unlike other retirement accounts that you can have as an employer, where your cost is fairly minimal, and you can get away with maybe just paying, if at all, for the retirement accounts, with a 401k, you're likely going to be paying for the administration fees along with the retirement account fees and everything. So it's going to be a much costlier endeavor there that you have to look at and you have to work with. TPAs are, in my opinion, a very vital part because they make sure that you are complying with all the laws. Just like using a CPA, using a accountant, they're making sure that you're complying with the financial laws. A TPA for your 401k is making sure you're following all the legal and financial regulations for that 401k. So I find it a necessary expense to incur there with 401ks. So they are definitely probably the most expensive option that you can go with for a retirement account. But that expense comes with a lot of benefits. It's the best way or the biggest amount of money that you can defer by putting money into a 401k. As an individual for 2024, and again, keep in mind, just like everything else, 401ks are going to have adjustments each year for inflation purposes. So for 2024, each individual is allowed to put up to $23,000 into their 401k on their own. If you are looking at a 401k and you are putting in money as the employer and you're the boss, you can do matching, but you can also look at putting in a profit sharing 401k and set that profit sharing up to substantially increase or even max out the amount of money going into your 401k. For 2024, if you're under 50 years old, that's $69,000 that you could put into a 401k. And if you're over 50, that's $76,500 that you could put in. So it's substantially more than what you could do with a traditional IRA, a Roth IRA, a simple IRA, or even a SEP IRA. So it's pretty substantial there. Now, the $69,000, that is limited to how much the employee makes. So if you don't make $69,000, you couldn't put in $69,000. But if you make $48,000, your employer could put in $48,000 total in addition, or combined with whatever you as the employee are putting in there. So there's a lot of money that can be deferred there and help you save for retirement. It's definitely one of the quickest ways to accumulate retirement there and help get on track, especially if you're looking to defer some taxable income there. And that's one of the benefits, or another benefit with the 401k, is the fact of having both a traditional route you could go or a Roth route. It works just like traditional and Roth IRAs. Traditional being tax deferred, meaning you're going to save the money on taxes this year and pay taxes on it when you pull that out. Roth being something where you're going to pay the taxes, but it's going to grow and gain all of that interest, gain all of those capital gains, and when you finally retire, it's going to be tax-free on whatever you have in there. And just like a traditional and Roth IRA, you combined, you've got that maximum of $69,000. So it doesn't all have to go to traditional, it doesn't all have to go to Roth, it's just a combined level of all of that together. So definitely a huge benefit there for people looking to save and people looking to start getting on their retirement, because so many people don't have a retirement plan in place. It's also a huge draw for employees that you're providing this match. Simple IRAs, again, you've got that 3% match there that you can offer, but 401ks, you can offer a lot more. 6, 7, some employers are even doing 10+% matches on their 401ks, which definitely is a strong draw for some employees. And I'm not going to say it's for all employees, but a lot of that's going to come down to misunderstanding or not understanding in the first place what retirement is and what you need for retirement. So another big thing to look out for with your TPA and with the financial company that you're working with here is that they work with you so that you're able to set up yearly meetings at minimum with staff to go over the benefits of a 401k and talk with staff individually about doing some retirement planning. That's another huge way to retain staff and or attract a good staff, because you're providing not just the means of saving for retirement, but the education for saving for retirement too. So that's got a huge benefit on it. 401ks are also a lot more flexible from the employee side. If you choose to leave the employer, you've got multiple options of what you could do with that 401k. You could either cash out your 401k, take the tax hit on it, obviously, we'll talk about that in a minute, or you could roll that 401k into your own personal traditional or Roth IRA based on how it was invested into the 401k. Now you are fully in control of everything and get to make all the decisions there, and you don't have to leave it in your employer's pool of what they allow for investments there. You could go ahead and also roll it over if you get a new job and your employer offers a 401k. You could roll it over to your new employer's 401k. or depending on how your documents are written for the 401k plan that you're a member of, you also have the ability to potentially just leave it with your old employer, let it continue growing. You can't make any new contributions. They aren't going to make any new contributions, but it's at least sitting there and continuing to grow. So there's multiple options of what you can do with that money when you leave, and there's no time limit. If you were only participating in the 401k for 6 months and leave the employer and move on, unlike a simple IRA, it's not locked up for another 2 years or another year and a half, preventing you from touching those funds, which is a huge benefit there. Now, I mentioned about the tax burden and everything. Just like any other retirement account, if you cash out prior to 59 and a half, you are required to pay both the income tax burden on whatever you're cashing out, along with the 10% penalty. So it's just like any other retirement account there, no changes. That's always going to be how it is. The other thing to keep in mind is 401ks do have a force out of a required minimum distribution, just like traditional IRAs. At the age of 73, you will have to take a required minimum distribution from the 401k. So you can't just invest in it and let it sit there forever and move it along. Now, like any type of retirement account, it's important to understand these laws, these regulations could always change. 401ks have been around for a little over 40 years now. There's been a lot of modifications on when RMDs had to occur. At one point, RMDs didn't have to occur at all. So especially if you're on the younger end, if you're in your 20s, 30s, even 40s, there could be a lot of changes while you've got this money sitting here. So it is important to understand that and have a solid plan in place for your retirement, which is why it's so important to work with and talk with a financial advisor. If you own your own business, if you're looking to get into retirement, partnering with or talking to a financial advisor is going to be huge. And if you're looking to start a 401k, working with a third-party administrator, a TPA, is also going to be something that you really want to make sure you get done. There's so much more detail on 401ks that I could go into. I could spend probably hours talking about 401ks, and we'll probably dig a little bit deeper in the future into 401ks because there are so many different things involved in it. This is just kind of a quick overview, quick crash course that I hope you enjoy and it helps you out. If you need more help, if you want to talk about how a 401k can benefit your business tax-wise, as there are tax benefits and even tax write-offs there that you have advantage of, feel free to reach out to us here at Waterford Business Solutions. You can either reach us by phone at 864-351-0852 or email at info@waterfordbusiness.com. Both are great ways to reach out to us, and we would love to talk with you. If you've got specific questions about 401ks and how they work, definitely best to work with a financial advisor there. But if you don't have someone, we've got plenty of people and TPAs or third-party administrators that we can connect you with there if you need that assistance. Thank you for sitting and watching this video with us. I invite you to please like and share this video along with subscribing to our channel so that you can continue getting more content like this. In the meantime, have a wonderful rest of your day, and I'll see you on the next video.